Hello, and welcome back to another episode of Market Brief After Hours. We are breaking down a very eventful Tuesday session where the narrative seemed to shift quite dramatically. It felt like the market couldn't quite decide if it wanted to celebrate economic resilience or panic about valuations.
That is exactly right. It was a messy session, to say the least. We saw a distinct risk-off mood take hold in the U.S., specifically with investors rotating out of those high-flying technology stocks. There is a lot of reassessing of risk going on right now, fueled by volatility in everything from precious metals to crypto. It wasn't a crash, but it was a definite retreat.
Let's dive straight into the numbers, because looking at the major U.S. indices, the damage was most visible in the tech sector.
It certainly was. If we look at the Dow Jones Industrial Average, it actually touched a fresh intraday record early on, reaching up to 49,653. But that optimism evaporated as the day went on. The Dow ended up sliding 167 points, closing at 49,241. That is a decline of 0.34%.
And the S&P 500?
The S&P struggled even more because of that tech weighting. It retreated 0.84% to close at 6,918. Again, this was broad-based selling within the sector. Investors are getting nervous about earnings momentum and just how high some of these valuations have gotten.
But the Nasdaq took the hardest hit of the bunch.
By far. The Nasdaq Composite underperformed sharply, sliding 1.43% to finish at 23,255. When you see heavy losses in mega-cap stocks and software names, the Nasdaq is going to feel it. The sentiment there was really hurt by continued weakness in artificial intelligence and cloud-related names. It seems the buy-at-any-price mentality is taking a breather.
Now, while the U.S. was sliding, Europe seemed to hold its ground a bit better. It wasn't exactly a rally, but it wasn't a sell-off either.
Europe was essentially flat, which, given the U.S. lead, counts as a win. The Pan-European Stock 600 remained unchanged. The saving grace there was the mining sector. The Basic Resources Index jumped nearly 4%, which balanced out losses in other areas.
Let's walk through the specific country performance in Europe.
Sure. The UK's FTSE 100 slipped just slightly, down 0.26% to 10,315. Across the channel, France's CAC 40 edged down a fraction, 0.09% to 8,174. Germany's DAX was flat, finishing at 24,797. The standout to the upside was Italy, where the FTSE MIB rose 0.77%.
You mentioned miners saved the day. Who were the big winners there?
We saw Anglo-American rising 7.3% and Antofagasta up 6.3%. That is a massive move for large-cap miners. It really highlights that rotation we talked about, money moving out of digital growth and into hard assets.
And the economic backdrop in Europe wasn't terrible, was it?
Not at all. We actually had some decent data. Eurozone manufacturing PMI improved to 49.5, and regional GDP growth came in at 1.3% year-on-year for the final quarter of 2025. That exceeded analyst forecasts. So, despite a slowdown in Dutch manufacturing, the broader European economy is showing some stabilization.
Before we move to commodities, we have to talk about Asia. It seems like they were trading in a completely different universe today.
It really does. While the West was cautious, Asia was surging. South Korea's Kospi was the headline grabber. It jumped nearly 7% to 5,288. It moved so fast they actually had to trigger temporary trading halts.
And Japan?
Japan continued its incredible run. The Nikkei 225 surged 3.92% to a new record of 54,721. The Topix was up 3.1%. And we can't ignore India. The Nifty 50 rose sharply following news of a U.S.-India trade deal. It was last up 2.55%. So the regional sentiment there is very strong, driven by expectations of continued growth in technology and memory cycle demand, which is interesting considering the tech sell-off we just saw in the U.S.
Moving to the energy markets, we saw oil prices ticking up again. Is this purely geopolitical?
It is heavily geopolitical right now. Brent crude climbed 2.81% to $68.16 per barrel, and WTI rose 1.96% to $64.08. We are seeing heightened tensions in the Strait of Hormuz, specifically incidents involving Iranian drones and gunboats. When you have concerns over supply routes like that, the market immediately prices in a risk premium.
And briefly on the U.S. bond market, what are treasuries telling us?
They were actually quite steady. The 10-year yield eased slightly to 4.265%, and the 2-year slipped to 3.568%. Investors are weighing that strong ISM manufacturing reading we got earlier, which rose to 52.6, signaling expansion, against the day-to-day equity volatility.
We are going to take a very short break. When we come back, we are going to dive deep into the Forex markets. I want to look at those technical levels, and we will discuss the wild action in crypto and precious metals. Stay with us. Welcome back to Market Brief After Hours. Before the break, we covered the equity slide in the US and the boom in Asia. Now I want to pivot to something that has been extremely volatile, cryptocurrency. Bitcoin is struggling.
Struggling is putting it mildly. Bitcoin has been facing intense selling pressure. It closed the session at $76,375, which is a 2.83% decline. But the headline here is that it broke below the critical $80,000 psychological support level.
That 80K level has held for a long time.
Nearly a year. Breaking below that is a significant bearish shift. It suggests the previous uptrend has lost momentum. Technically, that $80,000 level has now turned from support into a major resistance zone. The market is eyeing $75,000 as immediate support. If it fails to hold there, we could see a much deeper retracement.
In complete contrast to Bitcoin, gold and silver had a spectacular session.
It was a massive recovery. Gold surged 6.09% to close at $4,943. It had a huge trading range, dipping to $4,667 before rocketing back up. This tells us there is significant buying interest at lower valuations.
And technically, where does gold stand?
It remains in a powerful long-term bull market. It is trading far above its 50-day simple moving average of $4,486 and its 200-day SMA of $3,790. The structural uptrend is very much intact.
And silver?
Even stronger percentage-wise. Silver ended at $84.89, up 7.08%. It recovered from a low of $79.13. It reclaimed the $84 level very quickly, which points to high demand on dips. The medium-term trend is exceptionally strong here.
Let's move to the Forex market. I want to get specific with the technicals here, particularly the moving averages. Let's start with the euro against the dollar.
The Euro-USD showed some resilience. It closed at 1.1821, up 0.26%. It bounced off intraday lows, which suggests the recent correction might be finding a floor. Technically, the pair is still in a structural bull market.
What are the key averages to watch there?
We have an upward-sloping 50-day SMA at 1.1715. That is your near-term dynamic support. The 200-day SMA is down at 1.1611. As long as we hold above that 1.1800 psychological level, it is a positive sign for the bulls. Immediate resistance is at 1.1829.
How about the British pound?
GBP USD also recovered, ending at 1.3698, up 0.22%. It is a modest recovery after a sharp sell-off. The pair is comfortably positioned above its 50-day SMA, which sits at 1.3442. However, it was recently rejected from the 1.3800 zone, so we might see some consolidation.
The Aussie dollar had a very strong day, rising over 1%.
Yes, AUD-USD finished at 0.7023, rising 1.10%. Reclaiming that 0.7000 handle is a big psychological win. It turns that barrier into a potential launchpad. The technicals here are very bullish. You have the 50-day SMA at 0.6705 and the 200-day SMA at 0.6561, and both are trending higher. It signals the broader uptrend is intact, despite the global jitters.
And finally, the yen. We have seen a lot of volatility there recently.
USD JPY is currently in a bit of a consolidation phase. It settled at 155.72, up just 0.08%. The key technical battle here is the 50-day SMA at 156.27. It is acting as a formidable ceiling. The pair is struggling to break above it.
And the long-term view.
The long-term trend is still bullish. The 200-day SMA is way down at 149.99. But right now, there is indecision. If the bulls can't breach that 50-day average at 156.27, we might be stuck in a sideways pattern for a while.
Before we wrap up, let's look at the individual market movers. We had some massive swings in single stocks today. Whom were the losers?
The biggest story was probably Novo Nordisk. shares fell around 14%. They warned that fiscal 2026 sales would be hurt by lower U.S. drug prices, forecasting adjusted sales declines of 5 to 13%. That spooked investors.
And PayPal took a heavy hit as well.
A very heavy hit. PayPal plunged 21%. It was a double whammy. They missed on earnings and revenue, and they announced a leadership change. Enrique Lores is set to replace Alex Chris as CEO in March. The market generally hates uncertainty at the top, combined with a miss.
It wasn't all bad news, though. We had some earnings beats.
Correct. PepsiCo rallied nearly 5%. They reported better than expected quarterly earnings and revenue driven by improving organic sales. It shows that the consumer staples sector still has some strength.
And a tech name that actually bucked the trend.
Palantir. Despite the broader tech sell-off, Palantir jumped almost 7%. They beat profit and revenue expectations, reporting adjusted earnings of 25 cents per share on $1.41 billion in revenue. It proves that if you deliver the numbers, investors will still reward you, even on a red day for the sector.
So, pulling this all together, we have a tech rotation, geopolitical tension boosting oil, a surge in Asia, and a mixed bag in currencies. What is the takeaway for investors right now?
The sentiment is fragile. Global markets ended on a cautious footing. We are seeing this rotation away from technology and a reassessment of risk. The rebound in gold and silver provides some pockets of support, but with a heavy earnings calendar still ahead and those persistent geopolitical risks, investors are likely to remain very selective. It is about balancing opportunities in resilient sectors, like we saw with the miners in Europe, against the uncertainty in high-growth assets.
A complex picture, but that is why we are here to break it down. That wraps up our coverage for today. If you find this useful, please follow Market Brief After Hours on your preferred platform. We will catch you in the next session.